Trackstar, our proprietary sentiment indicator, is always full of surprises. At first, we thought the surge in financial pro search volumes for the North Shore Global Uranium Mining ETF, which we rate at 10 out of 10, was an error, because we didn't see a similar rise on the retail side. Uranium was a hot topic last year, but since then it's been forgotten, so the sudden interest seemed out of place. But rather than fight the trend, we've made it our focus for today's edition of The Spill. Now, anyone who's looked into uranium stocks is probably familiar with the Global X Uranium ETF, or the URA, but none of us had heard of URNM, which is managed by Sprott. URNM invests at least 80% of its money into assets tied to the North Shore Global Uranium Mining Index, which we'd never heard of either. This index tracks companies that devote at least 50% of their assets to the uranium mining industry, and also includes companies holding physical uranium, uranium royalties, or that are engaged in non-mining activities supporting uranium mining. The ETF's top 10 companies make up for 3/4 of the total weighting, and a huge chunk of the stocks in the fund are located outside of the US. And that's why we've never heard of most of the holdings, and before today, we'd never really heard of Sprott either. Since URNM started in late 2019, it's delivered an average annual return of 35.28%, and it trades at a 2% premium to the index it tracks. URNM has also significantly outperformed URA, even though it's far less actively traded. And we admit, URNM looks pretty awesome. It's volatile and it could collapse, but it's done remarkably well, producing some hefty returns. We wouldn't take a huge position and would use limit orders to buy and sell the stock, given its low liquidity. But as far as alternative energy ETFs go, this is a hidden gem.